Welcome back, everyone. You are tuned in to Today Assets Report, the channel that keeps you on the front lines of everything happening in the world of digital assets and decentralized finance. If you are new here, make sure you hit that subscribe button and turn on notifications because we drop content that you genuinely do not want to miss. Now, today we have a lot of ground to cover, and I want to start by saying, if you are an XRP holder, or even just someone watching the digital asset space from the sidelines, today's coverage is going to matter to you. Ripple just dropped what I am calling a full institutional blueprint, and it confirms almost everything we have been talking about on this channel for the past several weeks. But before we get into that, we need to set the stage properly, because a few major developments have happened simultaneously that all connect back to the XRP ledger in a very powerful way. Voice. Let's start with T54 AI, because this is a name you are going to want to familiarize yourself with sooner rather than later. We have touched on this before, particularly because of how closely it is becoming connected to the XRP ecosystem and the growing role of Ever in that space. T54 AI is still a relatively under-the-radar project for most people, but trust me, that is going to change fast. This is a company that is actively exploring AI-based agentic finance, verification infrastructure, and more, all being built directly on the XRP ledger. And if you stop and think about where finance is headed, we are talking about a future that is digital, that is automated, that runs around the clock without human intervention. Then what T54 is building starts to look less like a startup idea and more like the foundational plumbing of tomorrow's financial system. That is not hype. That is just where the trajectory points. Voice. Now, to build on that, there was a fresh announcement from T54 AI that deserves your full attention. They have confirmed that the X402 facilitator is now live on the XRP ledger. If you caught our last video, you already know what this is. But for anyone just joining us, let me break it down clearly. The X402 is essentially the gateway to automated finance on the XRP ledger. It uses artificial intelligence to verify transactions, assess the terms of those transactions, and ultimately authorize them to go through. We are talking about a system where an AI agent can look at a transaction, confirm everything checks out, and settle it using XRP, RLUSD, or USDC, all without a human being having to lift a finger. This is the architecture of autonomous financial execution, and it is running live right now on the XRP ledger. That is an enormous statement, and I do not think the broader market has fully priced in what that means yet. Voice. But here is where things get even more exciting. T54 AI just announced a $5 million seed funding round. Now, $5 million might not sound massive in the grand scheme of institutional finance, but it is who is backing this round that really tells the story. The round was led by Inagram PL Capital and Franklin Templeton. Yes, that Franklin Templeton, one of the largest and most respected asset management firms in the entire world, and it also includes a strategic investment from Ripple itself. Let that sink in for a second. You have Franklin Templeton and Ripple both putting capital behind the same AI infrastructure company that is building directly on the XRP ledger. Other investors in this round include Virtuals, Bitcoin investors, and ABCDE Labs, all serious names in the institutional and crypto investment space. When you see a lineup like that, you know something real is being built. Voice. So, what exactly is T54 building with that capital? Let me read you exactly how they framed it, because it is important. They said that AI agents are already moving money, but right now they are doing so unverified and unaccountable. There is currently no standardized way to confirm an AI agent's identity, no way to assess its risk profile in real time, and no framework for holding it accountable when something goes wrong. Think about that for a moment. We are living in a world where AI agents are already executing financial transactions, and yet there is essentially no trust infrastructure surrounding those agents at all. T54 is building exactly that, what they call the trust layer for the agent economy. That includes verifiable agent identity, real-time risk assessment, and programmable accountability. This is the missing piece that makes autonomous finance safe enough for institutions to rely on at scale. Voice. Monica Long from Ripple weighed in on this as well, and her words carry a lot of weight. She said she was excited to see T54 building the trust layer for the agentic economy and pointed out that as autonomous agents begin managing and transacting with real capital, trust infrastructure becomes a foundational piece of the equation. She also noted that Ripple is proud to be at the forefront of AI innovation. Now, Monica Long is not someone who throws around statements like that casually. She is one of the most prominent executives at Ripple, and when she publicly endorses a project and frames it in the context of Ripple's own mission, that is a signal worth paying attention to. This is not a side project. This is not peripheral. T54 and its work on the XRP ledger is being treated as core infrastructure by the people at the top of Ripple. Voice. There is also some fascinating consumer research that backs up why all of this matters beyond just the institutional side. A recent YouGov study found that 42% of U.S. consumers would allow an AI agent to make purchases on their behalf if it guaranteed them the lowest price. 42%. That is nearly half of American consumers already open to handing over transactional authority to an artificial intelligence. And on the cybersecurity and enterprise side, a key factor study found that 86% of cybersecurity professionals believe that autonomous systems and AI agents should have unique dynamic digital identities. 86%. Both of those numbers point in the exact same direction, toward exactly what T54 is building. The demand is there from consumers, the professional consensus is there from the security world. And now the infrastructure is being built on the XRP ledger to make it all work safely and at scale. Voice. Now let's shift gears and get into the main event, the blueprint that Ripple just dropped. This comes from Reese Merrick at Ripple, and the title is The Blueprint for Institutional Digital Asset Trading. And I want to be direct with you. This document is one of the most important things Ripple has released in a long time. It is not a vague vision statement. It is not marketing fluff. It is a detailed, technical breakdown of how Ripple plans to reshape institutional digital asset markets using a model called the Digital Prime Broker, the DPB, with the XRP ledger as the backbone of settlement and liquidity. If you are paying attention to where XRP is going, this document is essential reading. Let me walk you through the key points and explain why every single section of it reinforces what we have been saying on this channel. Voice. The white paper opens by identifying the core problem with today's institutional digital asset market. Right now, when institutions want to trade digital assets over the counter, they are forced to rely on what Ripple calls bilateral settlement models. That means every single counterparty relationship requires its own credit line, its own collateral pool, and its own settlement infrastructure. If you are a large market maker operating across 10 different exchanges, you need 10 separate credit relationships, 10 separate pools of capital sitting idle, and 10 separate settlement workflows. That is an enormous amount of trapped capital and operational complexity. And it gets worse because this bilateral model is dominated by retail brokers that often misleadingly call themselves exchanges, creating fragmented liquidity, systemic counterparty risk, and capital inefficiency that would simply not be tolerated in traditional institutional finance. Voice. Here is where it gets really interesting, and where the FX market comparison becomes critical. Ripple is explicitly modeling the digital prime broker off of FX prime brokerage. If you are not familiar with how the foreign exchange prime brokerage model works, here is the short version. Instead of every market participant having bilateral credit relationships with every counterparty, a prime broker steps in as the central credit hub. Everyone faces the prime broker. The prime broker faces the liquidity providers. Exposures get netted. Settlement gets streamlined. Capital gets unlocked. This model is what allowed the FX market to scale to over $8 trillion per day in trading volume. $8 trillion every single day. And Ripple is looking at that model and saying, we can bring that same architecture to digital assets powered by the XRP ledger. Voice. The white paper specifically names the 3 inefficiencies that the digital prime broker model is designed to solve. First is credit risk multiplication, the problem we just described where bilateral relationships multiply risk instead of containing it. Second is trapped capital, the enormous amount of collateral that is locked up in multiple separate margin pools across venues, sitting idle when it could be deployed productively. Third is fragmented asset risk, the operational complexity that arises when settlement timing, venue-specific requirements, and intraday fund movements all create unnecessary exposure. Ripple walks through a concrete example of a market maker buying and selling Bitcoin across two different exchanges at different times of day, and shows how, under the current model that requires multiple intraday fund movements, even when the net economic position is flat. It is a perfect illustration of why the current system is broken. Voice. And now we get to the part that should make every XRP holder sit up a little straighter in their chair, because this is where the XRP ledger comes directly into the solution. The white paper explains that the XRP ledger blockchain can support early settlement within the digital prime brokerage framework through on-chain credit lines. Here is how it works. The prime broker, or a defined group of approved credit providers, exposes on-chain credit lines to brokers and market makers. When a participant needs to settle before the standard net settlement window, they can invoke a smart contract to draw from that credit line. The prime broker's on-chain credit bridges the timing gap. The contract automatically accrues funding costs based on the amount drawn, the rate, and the duration. Everything is transparent. Everything is traceable on-chain. There are no hidden subsidies, no ambiguity about cost of capital, and no counterparty risk that is not visible in real time. Voice. What I love about this part of the document is that it is not theoretical. Ripple is not describing something they hope to build someday. They are describing a framework that is designed to be implemented on existing XRP ledger infrastructure. The smart contracts are there, the settlement finality is there, the speed is there, the cost efficiency is there. XRP settles in 3 to 5 seconds. It costs a fraction of a penny per transaction. It runs 24 hours a day, 7 days a week, 365 days a year. There is no other network that provides that combination of speed, cost, and reliability at institutional scale. And when you map those characteristics onto the requirements of a digital prime brokerage framework, where early settlement, transparent funding costs, and real-time accountability are all non-negotiable, XRP is not just a good fit. It is the obvious fit. Voice. Let's zoom out and talk about the scale of what this could mean, because I think it is easy to hear the words FX market and not fully internalize the magnitude of the number we are talking about. The global foreign exchange market trades over $8 trillion per day. That is not a typo. 8 trillion every single day. Now, nobody is claiming that the XRP ledger is going to capture all of that overnight. But think about what even a fraction of that activity would mean for the XRP network. If 1% of global FX volume begins settling on the XRP ledger, just 1%, that is $80 billion per day flowing through the network. The demand for XRP as a bridge asset, as a settlement layer, as the liquidity mechanism in those transactions, that demand would be unlike anything the network has experienced before. And Ripple just published a document that says this is exactly where they are pointing. Voice. And this is not the end of the road either. It is the beginning. Because once you have the FX market operating on-chain, the floodgates open for everything else. Equities, bonds, commodities, tokenized real-world assets, treasury management, cross-border commercial payments, all of it begins to migrate toward the same on-chain infrastructure. Ripple laid out exactly this vision in their institutional DeFi roadmap back in early February, where they highlighted tokenized assets, on-chain FX, and on-chain credit as the 3 pillars of their next phase of growth. The blueprint that just dropped is the detailed architectural plan for how that second pillar, on-chain FX, actually gets built and deployed at institutional scale. When you connect that to T54 AI building the trust layer on the same ledger and the X402 facilitator going live, and Franklin Templeton and Ripple both backing the same AI infrastructure company, the picture that emerges is not a coincidence. This is a coordinated build-out of the next generation of financial infrastructure, and the XRP ledger is at the center of it. Stay locked in, do your own research, and as always, thank you for watching Today Assets Report. We will see you in the next one.